Today I want to point out some tips, give you some advice to all those beginner future traders out there that may be having a hard time reading the market and not really understanding or knowing when to trade and not trade, okay? So you have what's classified as major highs or major lows and minor highs and minor lows, okay? And most of the times you're going to see your minor lows and highs are going to be formed within a actual area of swing. So when the market is like having a pivoting point to where it's bullish to the upside, and then it starts to form a bearish descent or direction to the downside, and then it starts turning back or forming a slightly bullish uptrend back to the upside, basically forming a swing. But you have multiple levels or layers of levels in between a major high and a major low. Okay, I'm going to show you that here in a minute just as well, but we're going to mark off like major lows and major highs. So I'm going to show you two areas. These are areas when the market is in between a major high or major low. When the market, that's typically an area where the market can start to range, and I'll show you what a range kind of starts to look like when we're in between a major high and major low for all those that are, having a hard time knowing when to kind of stay put. You've probably heard me say multiple times, wait for something major to happen if you're struggling with trading in between, all right, maybe in a range. That means breaking structure to the upside and taking out a major high, or continuously breaking structure to the downside and taking out a major low. Okay, so if the market is bullish to the upside, and that means that we're consistently making higher highs and higher lows, pushing to the upside. Demand areas are what we'll be looking for on pullbacks to go long. So if you see here, the market was making a bearish move to the downside. Then we started to break structure back to the upside. And this is what it looks like. We make highs, higher lows, highs, higher lows. And it's following that same path with momentum and bullish direction to the upside. All right. So if this is classified as our major high right here, where it makes its final approach before we get a nice little retracement or pullback to the downside. And again, this is on the NASDAQ futures. And, once you understand structure, meaning market structure, you'll be able to paint the picture and be able to see this on any particular market, on any chart. All right. So if this is the high that the market just that made off of this bullish move to the upside, and then we start to get it like a retracement or a pullback, this can be a pivoting point to where the market shifts from bullish to bearish. Okay, meaning a bearish downtrend or a bearish cycle where it's starting to make lower lows and lower highs to the downside. And the way that you should be able to, determine that, like I talk about in lots of videos, is that trend change, the shift in the tide, and where the market was making higher highs and higher lows, but now we've made a low, our first low, a lower high, and then it makes a lower low, breaking below, structure here. Okay, so if you got a nice push with bearish momentum to the downside, a nice decent pullback, and then a break of structure below a low, but it's also taken out the first level or area of structure to the left hand side right here, breaking through a low, then that's where you get that trend change. Okay, where now we've broken a low, made a lower high right here, and not taking out the previous high, and also breaking structure to the left. Now we're starting to make a cycle to the downside, or at least it could be a short-term trend to the downside. And then you get another push to where you got a new low, okay, a new lower high coming off this lower high, and now you got a new lower low. So once the market makes its first lower high, not breaking and want to push back up and break above the most recent high that it made, and then it comes down and makes a new low where it's broken structure here and here, that's your reversal right there. How long will it last for? Nobody knows. I mean, they can quickly do this and then turn back around and start to break structure back to the upside. In this case here, the pattern continues where we have a low, lower high, lower lows, lower highs, lower lows. So once we get that shift right here, we've now shifted from and changed direction from bullish to bearish, and now we're in between a major high here. So what you should do is mark off your major highs and major lows if you're struggling to determine which way to really trade. So once we made that shift where we have the first low, the first lower high, the first break of structure below coming to the downside and also taking out the first level or area of structure to the left, that's where you need to determine and again make that change and understand that okay, we were bullish, now we're back, now we're bearish. Mark off your major high, and then once you make a new low, that's going to be your major low right here. Okay, and again, if we continue making lower lows and lower highs, then each time the market does that, it makes a new low. Then just simply mark off your, go ahead and mark off your major high and your major low right here. Now you're in between something right here. This is where things kind of get a little tricky, and I'm going to show you. But right now, the market made a pullback, as you can see here. And like right here, let's take a look. We got a high, a higher low. Now it's made its first higher low, okay, right here, and not breaking the most recent low it made. And now it breaks above structure here in this area, small area structure right there. If I can blow this up for you a little bit here, and made a new high right here. So we're in between this major high and this major low here. Now we shifted from bearish and starting to make a little cycle to the upside, bullish rise, right? But then immediately the market makes this high here. All right, yeah, you can look for a pullback to go long, and this is a low probability zone here. But if this was a high probability zone right here, you could have definitely traded that. That would be, you know, where we have an imbalance or gap resting out. But either way, the market makes this high here, and at this point here, once it changes direction again, then we can go from looking for bearish movements on retracements to supply, now looking back to we're back bullish to pull back to demand. So when this happens right here, and I'm going to show you here, we're going to follow the course right now, but the market makes this high here and it makes a new low. So now that we've broken structure below these new lows, now we got a new low down here. I can move my arrow here because now we get still in between a major high and a major low. And each time it breaks below the most current low, then we can shift it to the downside. We're still in between something right here, right? So now we got a pivoting point to where we were bullish, bearish. Now we start to make higher highs and higher lows to the upside. And when we get the first break of structure with a, well, basically, we break structure to the left, okay, and we made a new high, this right here is the pivotal point right here where we make the first higher low, where the market then pushes to the upside and breaks structure above this area. So now we got the first break of structure above, really this high here and this high here makes a high, higher low. We got the higher low. It doesn't break this low here. And now we're breaking structure. So we're looking for basically two areas of structure to be broken. The first high it makes, the first higher low it makes, and then break structure, but also taking out structure to the left. So the market took structure out here and here. Now we got a reversal coming off from the downside back to the upside. So this is where traders get, most beginners, they end up getting kind of chopped up because they're not sure when to start looking for directional moves to which they were when the market was once bearish, to start looking for opportunity to go long. Just like right here where we were bullish and then the market came down and made its first low, first lower high. Okay, that's when you should start to be a little bit, start to receive some type of signal in your mind or form a bias and say, okay, this is the first lower high. Okay, and now we made a new low, breaking this low and this low, shifting. Now I'm no longer bullish. I'm looking for bearish. Now we went from bearish. We broke high here to the left. Okay. So when the first structure high, in this case coming from a downside back to the upside, is broken. Okay. Broke it here. Not ready to go long yet. Okay. We just broke because the market can then just break this area right here and then come down and break structure back down. We got to see the higher low being formed. All right. Once we do that, we take our structure here, make a higher low, come back up, take this high out. Now I'm looking for opportunity for pullbacks to go long. But if you're struggling to be able to trade things like that, then look for opportunities where the market takes out a major low or a major high. We just marked the major low here. This is still our major high. So wait for it to come back up and take out this major high here, or wait for it to come back down and take out this major low. If you wait for the major things to take place, in between where the market may be making a bullish cycle, then going back bullish to the upside, now you're in between this leg right here, not knowing, should I be going long, should I be going short? Well, once I see this right here pattern shift to where we're taking out structure here and structure here, I'm back bullish, okay? But it could be short-lived, but because the market could break right here and come right back down and break structure, which would be a major structure break below this low right here. So wait for the major structure points to be broken and taken out if you're having a hard time knowing which way to trade when you have, okay, well, we were just bullish. Now we're back bearish. What should I do? Should I be looking for shorts continuing or longs going to the upside? On pullbacks right here, when we're taking out structure here and here, when we start pulling back, once we made this higher low and broke structure here, I'm no longer interested in going short. Everything at that point there is going to be counter trend as the market continues pushing up to the upside. And then I start to say, oh, this is a supply area, you know, here or open here. Those are all going to be counter trend because now we're bullish back to the upside. All right, because the market's shifted right here. You've got to understand that. So when the market breaks above a major high, we're definitely very, very bullish at that point. But still, this is the signal. This is where the opportunity lies. Once this happens here, where we have the reversal to start looking for, instead of supply areas to go short, bullish demand pullbacks to go long. All right, as you can see, the market then breaks this area of structure. We start to move higher. And then into yesterday's trading session, not today, we started we continue making higher highs, higher lows. Eventually, we broke this structure right here. At this point, once we break this area of major high, I would be immediately looking for a pullback to a key area of demand. Okay, so it breaks structure here. It breaks it right here on this push to the upside. And then when it pulls back, it actually comes to a demand zone right here. And it actually taps into this one right below it. This is a little swing that could have held up right here. So it came down and tapped this one right here. Let me mark it off for everyone that's having a hard time seeing this right here. That's your demand zone. It came up, broke a major high, pushed up, came back, tapped the demand zone, took off to the upside. Then from there, each time it makes a new higher high, you can look for pullbacks to key areas of demand to keep moving with the market to the upside. Each time it breaks structure, but this area, pull back. All right, go long. As long as you have a high probability, demand setups. So then you continue making that move to the upside here, as you can see. And then let's see here. The market's making higher highs and higher lows. It comes back. This is a low probability. No, it's not. Actually, it is a high probability zone right here. So that's why the market reacted. This is another demand zone here at the top. Why? We broke structure above this high right here. It comes back. Demand zone resting right here. Aggressive buying. You should be able to see that. Taps that zone. You can go short. Go long. Back up to the tops right here. You got to understand, if you're going long on a pullback to an area of demand and you have it just retrace back to off of a high, you got to understand that high is resistance, okay? That where it's pulling back right here to this demand zone. Anything above it, especially because this is an area of supply, you can see aggressive selling right here. The market could hold up right there. So then we made this high here, and then it starts to do what? Lows, lower highs, let's see here. Yeah, lower lows, pulls back, more lower lows, pulls back, lower lows, coming to the downside. So we make a move here, pull back, and then we start breaking structure as we come down, okay? Yeah, we kind of wick this area below here, but you have to see a full close below this first area right here to consider it to where it's taking out the first area of a low, meaning breaking structure to the left-hand side. So push down, pull back, okay, makes a low here, lower high, then it comes down and breaks right here, as you can see right here, breaks below this low. So this is where the reversal takes place in this area right here, where it comes down and breaks below this low right here. So it's making lows, lower highs. That's our lower high right there. And then we get a new low where it's taking out structure to the left hand side. This is the reversal happening right here. Immediately it pulls back and you can go short on this little pullback right here because it broke structure below. So now we're looking from moving bullish to the upside, now bearish to the downside here. So, and then the market comes right here, makes a new low, and then it does what? We start pushing back to the upside. But again, what are we in between? A major high and a major low right here. So when the market starts pushing back to the upside, people are a little confused. A lot of traders that really don't understand structure, they start to be looking for short opportunities to go short. And you can, like right here, you can go short off of this area here because we haven't broke any structure back to the upside, all right, on the higher base chart here. So the direction is still bearish because we have a reversal that took place right here. But when it starts to make higher highs, higher lows, higher highs, higher lows. Yep, it's breaking structure on a what am I trying to say here? On a trend to the upside, kind of a channel moving back to the upside here, but it's not going to, your idea of the reversal actually taking place you shouldn't be looking to go long until the market really breaks above and takes out its first area of structure to the left hand side. So we got highs, higher lows, highs, higher lows, highs, higher lows. Yep, each time it makes a higher low, it's not breaking the previous one below it. So that's starting to form a bullish channel to the upside, which at this point, I'm still not interested because I want to see something more to give me more confirmation, meaning taking out the first area of structure to the left as it's making its push to the upside to the right. Highs, higher lows, highs, higher lows. So this is the right, this is the left. As it's making its move to the upside, look for your first area of structure to be taken out where it's made a high, higher low, and a new high to the upside. Once it does that, we've taken out structure here and here. I'll be looking for a pullback to go long because now we've got that full-on reversal taken to the upside. But as you can see what it did, high, higher, low, it pushes, continues pushing to the upside right here, and it takes out this major high right here. Okay, takes out a major high. So then you can look for a pullback to a key area of demand to actually go long. Well, in a pullback, we don't have a key area of high probability demand, but then it comes down here and then it pushes back to the upside. And now this is our new high, and we broke structure above this high right here. Okay, on this pullback, we got a new structure break. That's why I have this little arrow right here, because this is a high probability demand zone resting right here to where the market could pull back and then break higher. We don't know until the market opens back up on Sunday evening. By then, it could have already gapped down. We don't know. But, let's say it held where it was at and came down and tested this area here. Would this be a high probability setup to trade off of? Sure, it would be, back to the upside. But this is also another high probability demand area back down here. So there's two within this swing where the market just broke this area structure back to the upside. So I just want to say that. But this is how, you kind of stay out of the middle or the range areas when you're in between a major high, major low. Again, like I said, the best thing to do is when it's making bullish runs to the upside, mark off your major highs. When it's pulling back, then mark off your major low. No, that's in between now. This is a leg here. And when the market starts pushing back up, I'm not looking to go long once it starts breaking structure back to the upside. I'm sorry. I'm not interested in going short once it starts breaking structures back to the upside. I'm looking to actually go long. But that's what you need to pay attention to, is looking where your major high, your major lows are. If you have a hard time to say, well, I'm not trading in the middle of a major high, or major low on a leg or within a leg, I'm gonna wait for the extremities to be taken out, the high here or the low here. So hopefully that makes sense, guys. That's the best way I know how to break it down. When it comes to, let me say this, for a minor structure breaks, remember what I said at the beginning part of the video, where you have in between a major high and a major low. Excuse me. You can have when the market starts pushing back to the upside. In this case here, okay, coming off of a high, now we got a major low, and now it's making, runs where it's making its high, higher lows, higher highs, and we have where it's broken structure here and above here. Now the market's reversed. That's a minor high. These are minor highs pushing back to the upside as the market's pushing back to the upside, taking out, say for example, swing to the left. So, like coming to the downside, that's a minor high below that area. Coming down, that's a minor high. As it's coming to the downside, because now we've shifted from bullish to bearish, making minor highs to the downside. All right. And you can also have a major high within a leg in between a major high and a major low. Like this is actually a major high right here coming to the downside right here. All right. So if it took that area back off to the upside, so let's say it did this right here. We got a low, lower high, and then a new lower low, right? Now, this is a major high resting right here. So if the market pushed back up and took out a major high here, and we're in between a major low right here and a major high right here, you can have a major high resting in between a leg of a major high and a major low, like right here. If it came up and took out this major high right here, okay, I would look for a pullback to go long. Major highs, even within a swing or at the top of a leg like right here, or breaking a major low, those are very key areas in which carry a lot of weight. So I would jot down and, always be thinking, if you have a hard time trading where it's just taking minor structure out, wait for something major to be taken out, because those are going to carry a lot more weight. So this major area within this leg right here was to be taken out, moving back to the upside, and then I would look for a pullback to go long, all right, because it's going to hold more weight. But as you see in this case here, it didn't come up and break above this area. It kept pushing down. But once it does come up and start making these higher highs and higher lows to the upside, we start making minor structure breaks, like right here. Push up, pull back, broke a major high, all right, pushing higher, taking out a minor high. If I said major, I'm sorry. Minor high here. This is actually a major high. Then you have a minor high and then a minor high here. So once we move from bearish back to bullish, you should be looking, and once we got where the market is breaking structure back to the upside, I would be looking for only opportunity to go long, all right? But you got to understand that pivotal part where the market is transitioning from either bullish to bearish or bearish to bullish based on a trend reversal pattern taking place. And that's why I talk about that in market structure videos, especially the one to all those who are the elite channel supporters. And if you choose to want to become one, that's why I break down the trades that I actually take, the ones that I post over on our Discord community. My trades that I take, I'll post them over in Discord. Then I'll go back and I'll make private community videos for the elite channel supporters. If you want to become one of those members, it's only $6.99 a month. That's where you get all the trade breakdowns, where I talk about structure in detail in reference to the trades that I take, talking about profit target areas to look for where to take the trade to, stop losses. What else? You get the video playlist and that great video that I covered on market structure. So if you're interested in joining and becoming an elite member, the link is down in the description portion of the video, right below the Discord link. The Discord is free to join. Right below that is the elite member link. Okay, but that's pretty much all I want to talk about today. Was the difference of major versus minor areas of structure. Understanding that if you have a hard time reading the market and you're in between, say, a major high and a major low, major high and a major low, then wait for the extremity of an area, okay, of a high or a low to be taken out. This is a leg. So look at things as a leg. Once it starts making descending from bullish back to bearish to the downside, and you got your final high up here, where you're going to have a final low before it starts pushing back up. Now you're in between the high and a low of something major. So wait for either the major parts of a leg to be taken out to the upside, or the major parts to be broken to the downside. Same thing here. Pushing up, we went from bearish to bullish. Now back bearish, we're in between a major high and a major low. So wait for this low to be taken out if the market came down and broke it here, or wait for it to be taken out up here and it decided to go back to the upside and take out structure right here. So it took out a major high right here. All right. So now that we're bullish back to the upside, we can start to descend back to the downside and start to make lower lows, lower highs, lower lows, lower highs. Now this would be our most recent major high. And if we start making lower lows and lower highs to the downside to where we get a reversal in the market, now we're in between a major high and a major low, wherever that ends up at. Okay. But that's all I have. I appreciate everyone taking time to watch today's video. If you're not a current subscriber, please take the time to go ahead and click on the sub button. Make sure to turn your post notifications on by clicking the bell as soon as you click the subscribe button. Outside of that, that's it for today. If you do me the biggest favor and click on the like button, which is that thumbs up button, I appreciate it. That helps get the video content out to where it needs to go here on YouTube, to all those that are interested in this valuable content that I'm sharing. And if you found value in today's video, talking about ranges, talking about knowing when and when not to trade. If you know how to trade minor structure in between majors, then that's good. All surrounding supply and demand and understanding market structure as a whole, please make sure to click that like button. Take care. I'll see you in the next video.